Hello, I'm Elliot Hasty. Welcome to The Future is Fintech. The banking industry has been rocked by regulation changes, the introduction of open banking, and of course, COVID-19. The end result will be a banking system that works better for everyone involved. I sat down with Dom Pim from Upbank, Malcolm McNaughton from Backbase, and Dave Hornery from Judo Bank to discuss how they are reacting to these changes. I started by asking Dom from Up why he chose to partner with an existing bank ahead of launching their Neo product.
There's two reasons for it. The first is that, as you say, we were very early to launch, and so the actual regulations hadn't changed yet, and so you couldn't get the restricted banking license when we first wanted to launch Up. And so that was one compelling reason, is to, getting a banking license was hard, and the restricted license hadn't been introduced yet. And then the second reason was so that we can focus on technology and delivering the customer experience, and we don't have to spend all of our time, money, and energy on building a regulatory compliance, legal and sort of banking infrastructure that you'd normally be required to do. So I think both of them provided a competitive advantage. One in terms of moving quickly, and the other in terms of continued focus to be able to keep being first mover and staying ahead of the pack. So yeah, definitely was a different way of going about it. Probably cheaper way of going about it too.
Do you think that we're going to see more partnerships like this? Already we've got Judo doing a similar one in Australia. Do you think that we will see more partnerships?
Yeah, I think so. I think it makes sense. Probably the two predominant ways now to launch a digital bank have been through getting the restricted banking license and working your way towards a full license, and that's one sort of path that follows the regulatory framework. And the second is this partnership approach. So yeah, Judo's been the second one. And then we've also seen a couple of others. Even when Revolut launched in Australia, they were rapidly and have still done partnerships with incumbents. So I think that we'll see more and more of that activity. We've had about sort of 3 or 4 of each approach to date. So the jury's out as to which one will dominate. But I think they're both viable, and they're both good approaches to get to market.
Now, David, I might bring you in here because obviously Judo Bank, you did do it, all by yourselves. Obviously, you do have a slightly different market servicing more the SMEs. But what was your experience like with going through that route?
Well, we went for a full banking license from day one, and really from the outset, we built the organisation to be kind of match fit to go through that full banking license process. It's been great for us. I mean, it took us a solid 12 months, but you have to take your hat off to the regulator. I mean, there is no more sustainable way to drive reform in the financial services sector in Australia than the introduction of competition. So the restricted ADI or the capacity to do a turnaround, a full ADI within 12 months. Is one of the ways you can bring all of those that are sort of sitting around the bench today to the table and introduce different competitive angles and perspectives into the market.
Now, was there a reason why, because the restricted ADI, correct me if I'm wrong, it was available to you when you were going down the path. Is there a reason you went straight for the full ADI?
Well, we had the capital backing, we had the investors behind us. And it was, we had a proposition that was very well crafted, that we had built out in detail, and a full library, if you like, of governance and policy, as well as a core proposition around relationship banking. That was always better positioned as a full banking license application rather than a restricted one. But the RADI is also very legitimate for organisations that are at different stages. It's all about bringing more competition into the sector.
Yeah. Malcolm, I'm going to bring you in here because obviously as Backbase, you are a provider to both the new banks and the incumbents. What have you seen in terms of pathways, I guess, to offering banking?
Well, obviously no different ones from the ones that you've already been discussing. We're certainly seeing the challenge for some of the founders that we're talking to of managing the regulatory journey, and the recent sort of hiatus in the RADI process has really complicated life for some of those who are out there raising funding. Building a bank, obviously we look at it from a technology point of view, that's a hard enough job to do, and sort of balancing this whole regulatory process and the capital requirements around that. It's a pretty onerous journey they've got to go on.
Yeah, absolutely. And do you think, from a neobank perspective, do you think that the RADI makes it certainly easier to come into the process, or do you do the Judo Bank and skip the RADI and go straight to the ADI? What are your clients telling you?
Certainly the ones that, most of the ones that I'm talking to are taking the RADI route. And, that's principally because it is easier. The hurdles, whether it's from a capital point of view, but also from all of the other elements that APRA are looking for, are lower. So if you're starting from scratch, it's, unless you're in the advantageous position that the Judo guys were in, it's a lower hurdle to cross first time.
Absolutely. Now, of course, at the moment, we can't go on an interview without discussing COVID-19 and sort of what's that done. Obviously, at the moment, as you just said, it has paused RADIs. And I'll just ask you first, do you think that will slow down the competition in Australia, or do you think the minute they open that up, they'll be able to just process very quickly some newcomers?
It's definitely slowing down some. There are multiple neos we've been talking to for a while who have had to put their plans on hold and wait and see what APRA is going to do with that process. In the scheme of things, though, I'm not sure that's meaningful, right? This isn't about getting competition happening in 6 months' time. This is a very long-term transformation of the financial services landscape here. Yeah. So, as long as we're not talking about a hiatus of 3 years or something, I don't think it's a meaningful impact.
What are your clients saying to you? What help are they needing in terms of, I guess, technology to facilitate this current pandemic?
So I think, the technology piece, especially for some of the neos that I was mentioning earlier, if I contrast it with the journey, say, that Up went on, that's several years it's over which Dom and the team built that. Some of the neos now are seeing how quickly this market's evolving, and so there's no longer really the ability to afford multi-years to build out your proposition. An idea that looks great today, in a year and a half, actually may not be that compelling. And so our primary role with these neobanks is really accelerating their time to get their proposition out into the market and start getting the only thing that really matters, which is feedback from customers to validate, the value they think they can create.
And how do you do that? How do you ramp up the speed to create that value?
So we've got a proven platform that's used by, got over 130 clients globally, from tier 1 banks right down to small credit unions. So that technology platform's been thoroughly tested and, well developed in the banking industry. And then on top of that, we've got what we call accelerators, which are all of the standard elements that you need in a banking experience. So if you're a neo who wants to accept deposits and then do something interesting to help customers, use that money, then you need the capabilities to, show them that money, let them make payments and so on. That's not differentiating, so there's no point for that neo to spend a whole heap of time building that. So we give them that out of the box, and so they come out of the starting blocks very, very quickly with those basics and can focus their time and their investors' capital on what's actually going to win them customers.
Now let's turn to the next big sort of ticket item in banking, which of course is open banking. I'm particularly interested, David, to hear from you, just because I haven't seen much about the SMEs, but we might start with you, Dom. Now, you obviously opened up your proprietary API quite recently, and I'm just sort of wondering, was that always the plan, and what has it done for Up?
Yeah, look, it's interesting because there's been a lot of talk and a lot of airtime, I guess, to open banking and consumer data rights, and we're absolutely taking part in that right across the industry and participating in open banking. At the same time, it has always been part of our strategy to provide customers with their own access to data. So what the CDR and open banking is all about is actually providing third parties with access to your data. Now, it's not that there isn't a future plan, to get customers having access to their data as well, but that requires regulatory change. It requires implementation across the whole industry. So for us, it was like, can we again continue to be a first mover? Can we release capabilities for our customers to hook into their own data and then have that sort of secure access to it without having to go through an intermediary and without having to share it with a third party? So the actual two strategies sort of straddle each other and are quite complementary. And what we've seen in terms of the impact is that we, within minutes of releasing the API, we had customers building on top of Up already to build solutions. And then, within the first week or 2 weeks, we had over 1,000, people that had sort of requested secure access to the API. And then we've had over 600 apps being built on top of Up. So it's, to what Malcolm was saying earlier, is that it's taken us years to build this foundation to get Up into the position that it's in. And then moving forward, we can't compete with all the big banks and all the neos and everything just on our own steam. We're 60 people, right? But what we can do is we can open up the capability for our own customers to build those tools and the differentiating factors, and actually contribute to the innovation and creativity within the neobanking sector and within the broader banking sector. And that's what the API itself has been designed to do. And we've seen that literally in the first couple of weeks, like I said, more than 1,000 people getting involved. And it's not for everyone. Like, not everyone is going to be a software developer or be interested in an API. But the types of things that we've seen, just to finish off, has sort of ranged from people building an integrated playlist on Spotify so that when you pay money to them, it rates your song up the list, and then it gets, and it plays out on the radio. And other people have built things that have been a financial dashboard, or integrating Up data into MyOb or Xero, or integrating into Google Sheets or Microsoft Excel. So you can see that the breadth of tools is only limited by customers' imagination.
And David, I presume you don't have a Spotify playlist quite yet for Judo, but what have you seen from the business community, and what does open banking mean for them?
Well, I think as open banking will progressively roll out across the business community, it's another solid plank in the development of competition in the sector. Yeah. And that's because many SME clients tend to be tied to their existing bank, because while they have a very strong credit record with that institution, that has not been their own, that data has not been their asset. That's not been portable. And so as and when they want to move between institutions, which is imperative in a competitive system, they should be able to take that as their own data. They should be able to say, here's my credit history with this institution, which is very strong, and then take it to another institution, be able to download that, and then have their own credit worth assessed against that. The other part of that, which is a sort of a bigger picture thing, but very important, again, for the SME sector and competition in funding of it, is once that data becomes more available, more public, and more analysable, you then start to build a securitisation market in Australia for SME lending. There's plenty of that for mortgages, plenty of that for credit cards and cars, but very little for SME. It's something the government, through the Australian Office of Financial Management, is trying very hard to promote. And open banking, in addition to being a benefit to the SMEs by making them more mobile, also adds to the potential system growth or development of the system and the liquidity available to SME borrowers and lenders.